Today, we're going to look at the phenomenon we call relisting. If you've been paying attention to the data for the last year, you're already familiar with the withdrawals we were tracking last year. When a house sits on the market without offers, a seller has basically two options. They can reduce the price or they can take the home off the market, wait until conditions improve. During the second half of 2025, we tracked significantly more withdrawals than any recent year. There are always plenty of withdrawals over the holidays, of course, and in January, some of the homes that were pulled from the market last fall begin to be relistings. Now, you can't typically get this data from the MLS because MLSs call this new inventory. We track every property individually so we can see exactly which are relisted and which are in fact new listings. So it's January and the relistings are emerging. As of this week, there are nearly 80,000 homes on the market that tried to sell last year, were withdrawn, and are now relisted. 80,000, that's about 11% of the active inventory of single family homes on the market. So here's a caution with this data. It's very tempting to look at the withdrawals and relists as simply a supply side phenomenon. That these are sellers who want to sell. They pulled their listing last fall and the supply is going to roll in like a tsunami onto the market this spring. In our investigation, however, it seems like most of these withdrawals are owner-occupiers. These are people who generally want to sell and buy a new home. So they are move up or move down buyers. These are people who delayed relocation to a new town. So each withdrawal is not just supply. Each withdrawal is probably two transactions waiting to happen. So if this assessment is correct, we should see it in the data. And I expect to continue to see the relists climb this spring. And we should also see the weekly pending sales start to climb in tandem. That is, if conditions improve a bit, we should see both transactions, not just the supply side. So let's take a look at this week's data, starting with the relists, and see what it tells us about the spring housing market. Okay, this is the view of the relists as a percentage of the total active inventory. So it's up to 11% as of this week. There are definitely some of those would-be sellers from last year who are trying again this spring. Last year at this time, it was 9.6% of the active inventory. In this view, each line is a year. We can immediately see that this year there are a lot more relists than we had at the start of 2025. The blue line is heading higher quickly. That makes sense because there were a lot more withdrawals last year. They're coming back on the market now. 11% of the active listings were withdrawn at one point and are now relisted. Here's another view of the relists. So this is the total count. The percentage is higher than last year, and there are more homes on the market now. So the absolute count is even higher. So there are 76,000 homes on the market right now, almost 80,000, 76,000 that were listed last year, pulled over the holidays, and relisted. I wanted to include both views because the percentage is higher than last year and there are more homes on the market. So 76,000 now versus 64,000 relists last year. So in this view, each column is a week. The taller the bar, the more relists are on the market at any given time. There are 76,000 now versus 64,000 a year ago. So this is not data you can get from an MLS. In general, the MLS rules let a seller withdraw a listing and for 31 or 91 days and then call it new again. That resets the DOM in the MLS. That resets the original list price. So you can understand why sellers would do it. In this data, though, we are tracking the properties individually and can count the total days on market and illustrate the relist rate so we can better understand how supply is actually working in the housing market. And here's what we know. Withdrawals were high last year. Relists are surging now. If that surge were not coupled with a growth in home sales, that would be a bearish signal, supply without demand. So let's take a look at the weekly pending sales data next to see if this is both supply and demand. We counted 56,000 newly pending single-family home sales this week. That's a big jump of 12% from the week prior, which happens in January, of course, but it's also 8% more sales than a year ago. So the data from the pending says both demand and supply are inching higher. The recent average growth in pending home sales has been about 6% more than early 2025. I think this is notable. Mortgage rates are cheaper. Last year was really rough. In January last year, the weekly pending sales were coming in very low. Sales are better now. Like I said, the dynamic I'm watching for in those relists as they roll back onto the market is, are they met with increasing sales? So the growth scenario is when both of these numbers are climbing together. Over Q1, we see the relist level climb. These pendings, if the pendings don't climb, that's the market giving us a very different signal than I'm expecting, frankly. So we're going to keep watching for that. I've plotted the weekly pending counts here. The blue line for 2026 is each week stepping up faster than last year, 56,000 now versus only 52,000 a year ago. We have a weather week across the country this week, so we'll see if we can see any impact in the data next Monday. Stay tuned for that. Also, NAR released last week their December pending home sales data, which reported December pendings down massively. Got a lot of headlines. But I think it's probably a quirk in their seasonal adjustment math. In our count, the pace of pendings for December, while it lost momentum compared to October and November, there was nothing in the data that indicated anywhere near like a massive 9% crash that NAR reported. Our count of December pendings was basically unchanged from December 2024. And meanwhile, as NAR is still counting December, pendings from a month ago, the current trend now in the January data is up consistently. So we counted 8% more pending sales this week than the same week a year ago. The recent average is 6.2% more contracts started than last year. So I recommend taking that NAR data with a grain of salt. In our counts, the trajectory for 2026 looks to be improving, as you'd expect for having significantly more affordable mortgage rates than a year ago. The takeaway for sales volumes is that despite all the confusing headlines, the actual data, the weekly pending home sales are averaging about 6% more contracts than a year ago. So far, so good in 2026. Let's look at overall inventory. There are now 698,000 single-family homes on the market. That's up just 30 basis points from a week ago because new listings and weekly pendings are both up. So inventory is 9.6% more than a year ago. I continue to expect inventory to bounce in the 690 to 700,000 range for the next few readings. And we're expecting about 10% inventory gains for the full year. We have a crazy weather week across the country this week, which will probably delay a few deals. And so it's totally normal for inventory to bounce up and down a bit here at the start of the year before starting to climb in February as spring emerges. In the data, there are some signs of new listings growth. So in addition to the relists, there are 54,000 single-family new listings this week, and that was 5% more sellers than a year ago. The takeaway for inventory is that we can see some seller activity starting to bubble up, both in new listings and in the relists. And as long as the pendings keeps pace, then I don't see inventory growing very rapidly this spring. This is a very different story than a year ago. Let's do two quick views of home prices. First, I've been sharing this view of asking price per square foot lately. It's a very clear, not noisy, nicely normalized view of how much homes cost and how that's changing. This measure has been showing nationally home prices with year-over-year price declines since back in August. The headline data you'll see elsewhere has not caught up to this yet. It can take a while for that lagging data to catch up to the real-time data here. Now, this view is showing that home prices are in fact back to 2024 levels. So 2 years with no price gains. This is a national median price view, and that means that there are some markets with home price higher and some markets with home prices lower. Some are up, some are down. But the important thing to note here is that even flat prices year over year, or 2 years in a row, is a pretty rare scenario. So home prices by this measure are 1.6% below last year this time and almost below 2 years ago. So you can see that in the chart here. So I'm showing here the last 3 years with the median ask price per square foot for all the single family homes on the market at a given time. The blue line for 2026 is at the left end of the chart. See, it's below the purple line from 25 and almost below the 24 line. So it's still fractionally more now, $208.63 per square foot versus $208.32 2 years ago. The trajectory of the blue line is still less steep than the other years in January. So that says there is not upward pressure on home prices, even as unit sales volumes are climbing. So you can imagine that if you withdrew your listings last fall and you're relisting this spring, you're pricing it now at a slightly lower price. As those sellers come back, the prices in the active inventory here are likely adjusting lower to get deals done. And that's the big trend for 2026 that we've been talking about for a while. Inventory is sufficient so that home sales can increase, but home prices are not. That trend continues. At the same time, price reductions continue to ease just a little lower. There are still more homes on the market now with price reductions than a year ago, where the asking price that we just reviewed is a measure of the current market. These price reductions are a leading indicator for future home prices. So if a house is on the market now and doesn't get an offer, it does a price cut. Then maybe it gets an offer in February and March, and a deal closes in April. The velocity of the price cuts right now gives us information about the future. Right now, 33.6% of the homes on the market have taken a price cut from the original list price. That declines as fresh inventory gets listed for the spring here. So last year at this time, that number was 33, so just 60 basis points lower. Last year, though, because demand was so crushed, this third week of January was the low for the year in price reductions. By early February 2025, price cuts were already kicking in. The purple line here is 2025. You can see that at the left end of the chart, it started heading up early. The blue line for 2026 in this chart could dip below last year as soon as next week. Accelerating price cuts in February 2025 told us that the end of last year would have the price pressures that we've been talking about in that last chart, for example. We still have elevated price cuts now, so that tells us there's not some magical demand increase to push prices higher, but this data is improving slowly compared to last year. So it implies that there isn't a lot of downward pressure on prices either. That is, home prices are flat or below 2025 by a little bit. That makes sense, but there isn't any data that says big price drops are accelerating. Prices are flat or down a little bit. They're aiming to stay in that range, that flat or down a little bit for the year, maybe up a little bit. Summary for the week of January 26, 2026, the withdrawals from last year are returning now as relists. But as of now, the sales rate is keeping pace, so inventory is not climbing too quickly. Inventory is ample enough that we expect home prices are not heading significantly higher anytime soon. All right, that's all the data we have time for today. We'll see you next week.